Cheers to a thunderous Thursday retail trading team. This is your routine debrief. We're going to start today's cool down by reviewing the day's results, as we always do. And I'm going to riff a little on today's results. Okay, so $600 in the green. Good, right? Not so much. So if you go to my Twitter, you can read the full tweet storm. I believe that's what they call them on this. It's only 3 tweets. Not, I guess, a storm is more of just a minor thread. In any case, so what happened today is we saw emotional slippage in action. Okay, so I closed early and I cost myself $3,700. So yes, $600 in the green. However, should have been 3,700, and it's really important, and I talk about this in the thread. It's really important that you don't make even small mistakes like this because it affects your expectancy. That $3,700 can go toward a day like yesterday where I lost $3,000. So between the 2 days, I would be in the green now, but because of my early close, based on fear, I'm not. And it's just a good lesson. Oftentimes, emotional slippage presents itself in the form of greed. So FOMO, revenge trading, trying to squeeze that last little bit of juice out of the lemon that is our beautiful stock market. But this time it came in fear. So I took that $800 in slippage yesterday. I didn't want to take it again. And so I closed at 2x loss or 3x loss. And if I just held, executed the system, the same system, I'm always ranting about mechanics. If I just executed my mechanics, I would have had the full profits and it would have been a beautiful day. So just a good little lesson on how insidious emotional slippage can be. And there you see it right there. So not to dwell on that too much, we're going to look at the 0DT landscape for tomorrow by first examining what happened today. Okay, so looking at our chessboard here, I'm going to go ahead and put these in their own column. What happened today? So we opened up and we started to chop around. And so if you look at the highs and lows from the early session, you can see this one right here. This is several days worth of TPO. So I'll zoom in a little bit. Early in the day, we went after that overnight low, and what did I say? If you're following me on Twitter, I said because it's this choppy, open auction type tape, they love to do those overnight traps and overnight low traps as well as overnight high traps, and we got both of those today. So we had the low swept in the morning, popped right back up, swept the high at the end of the day, and that's when we started to see that reversal. And I want to draw your attention via a handy dandy arrow to this level here. This naked POC at about 42.75, that level specifically 41.75, so super close. I think yesterday it was like 41.25, but that general 41 level in the ES has been extremely important for 2 days in a row, structurally important as well. 2 days in a row, you don't often see that, and it carried over to this naked POC that we're seeing in the overall profile. So I'm going to merge these back together. Okay, so that level to me is a super important pivot going forward. We have the big news tomorrow. You can see we have a huge range. It's really from about 3,900 all the way down to the low that they put in after market at about 3760-ish. Big range for tomorrow. Big news, so anything can really happen on either side. Obviously, we're near the low end of it right now, but watch that 42.75 number. I think just based on what's now 2 days of activity going into a third, that's going to be crucial, and we're going to want to see how price reacts to the level and how time and volume build either above if we start to accept or below as we get rejected. So the major level for tomorrow morning, again, it's big news. We could swing 100 points either way. It would not be surprising. How many times have we seen that this year? Watch that 42.75 level. On the downside, obviously, if we break below the low that we put in overnight, I think that's going to be a pretty good bearish sign. And yeah, we'll cross that bridge we come to at 8:30 tomorrow in that sense. So if we're looking at the volatility landscape, again, mentioned in the newsletter this morning, we saw that test of the major trend line. So this trend line, I'm just going to zoom out a little bit. This trend line goes back all the way until the 10th, 9th, 10th of the month. Okay, so this has been a really important channel. So just to clarify, we're looking at this green channel here. I'll make it a little thicker. And we're looking at this top channel here. And for most of the month, that's kind of been our range. And today we tested the bottom of it. We currently bounced up from it. So in my opinion, I'm going to zoom in a little bit. VIX has entered a period of consolidation. And how do we recognize that? It's when the horizontals become part of that channel. So I really think we're now looking at this horizontal here. Obviously, I'll just draw. No, I'll keep the trend line here. So we have the trend line in the bottom. We're watching this horizontal. The most interesting thing that happened, I think, after market is we had that big sell-off. But look at this. Volatility, lower high. Did not get above the horizontal. Didn't even really, not even really, it didn't touch it at all. So we're seeing that potential volatility divergence. So if we go over to the big picture chart now and see what's going on. So first things first, this is one of our major trend lines. We didn't quite get up to it, but we did touch that POC. So this white line at the 80 area, that was our major level for several days. We were saying that it was kind of a magnet because the behavior of volume and a volume profile, if it accepts into the bottom, it goes to the POC, and then it gets rejected or goes to the top of the profile. We're seeing the rejection. No surprise, we're in a bear market. So macro picture, we're still trying to decide how we want to treat that POC. And if we look at the 4-hour chart, back to the hand tool, I'm going to zoom in a little here. A couple interesting things happen. So the most important, I think, get the chart adjusted here. Very good. The most important, I think, was that after we did that big move down and Apple earnings came out, the bulls were able to recapture, and you can see that it's represented as this blue box. They were able to regain that level that was initially lost in the push. So that's our first bullish sign. Secondly, I just want to bring your attention to some significant trap delta down here. See my excellently drawn ellipse there. You can see you got some big shorts. So you have some trap sellers near that low. So if we do run toward that low, that's another level. It's going to be interesting how we react around there. And finally, we're currently, and we closed within the week's balance. So again, looking at this part of the chart here, you can see that red horizontal. That is the bottom of balance for the week, and the bulls were able to capture that despite the big move after hours. So what does that mean? Well, it pains me to say that I am fading my friend OJ, and I'm currently in a long. So I got in at 98. I'm targeting just 16, and my stop is going to be if we breach. It's 91.50 here, but I'm looking at a little smaller time frame, so 90.50. Simple 2-to-1 risk reward, and yes, I did not put that on until I began the routine review. So just another example of how these are helpful to me as well as you, hopefully. And that's it. So big news tomorrow. Really, anything can happen, which is why it's just a really quick little scalp, nothing fancy, going into the news. So we'll see what happens then. Please check the bio for engagement links as well as my playbook. I'm always happy to answer any questions in the video, as well as any questions you submit via the newsletter. And I'm excited for tomorrow, and I hope you are too. And until then, stay classy.